Good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, February the 8th, 2022. The markets did get a little bit more active today, and they did push higher today. There was some acceleration, but when we look at it on the hourly chart, it really doesn't look like that much. Now, where are we and what can we do from here? I continue to feel now a little bit more strongly about changing the count as I did, in that the market has completed the larger advances. And now we've come down initially in an ABC, which took us to this level, and that is intermediate wave A. Then we get an ABC up, that's intermediate wave B. And then we are starting down lower. Now, within that pattern, it does appear that this would be one of three, and we're still within that two of three. So let me take this down to the 30-minute chart, and we can kind of take a look inside here. And if this is like 1, 2, 3, 4, 5, then this would be A, and this would be A, B, C, B. I mean, it's ugly and it's nasty, but it does count that way. And now, again, we're in that C wave. And as I have been discussing, the choices for the NASDAQ right now were that it's going to start to accelerate lower in wave 3 of C, or it's going to accelerate higher again in wave C, but of 2. So let's just put the Fibonacci extensions on that would help us get an idea how much more upside we can have. So first one goes right up to the top of that A wave. We come down to today's lows. It's going to be right there. Not perfect, but good enough. And so we can see that the C wave, if this is wave 1 of C, 2 of C, and we're in that 3 of C, or maybe even less. Again, let me go down one more. I need to see inside that structure. And pretty much we might get an A, a 1, a 2, and this is a 3, a 4, and a 5. See, we got a nice ABC down, and then we just rallied right into the close. So that was the big difference today, because as we have seen, we've seen a lot of redemptions, I believe, within the funds and portfolio management. And that has come in at the end of the day. It's come in the morning hours, and then the stronger comes back in within that last hour of trade. Today was new money coming in. And that's what I'm calling it, because normally this is the normal period of time where 401k and IRAs, they start placing the money and they put it back into the market. And that's what I think was going on today. And into the close, it was pretty strong. We have the Dow futures now up 414 in the after hours. The NASDAQ is up 185 in the after hours. So that acceleration kept catching up with itself. And again, what's really continuing to weigh on the NASDAQ is Facebook or Metaverse, whatever we want to call it. That and PayPal, and quite frankly, during the day, Tesla, quite a few of them. Google had some play today, but mostly was really hanging around unchanged to lower. So that kept a little bit of a downside pressure on the market today, but the new money coming in got us into a nice rally, and now we push. So how high can we go as we await for Thursday's CPI number, which I believe everyone wants to hang their hat on in terms of what the Fed's going to do. If those, and it's also, we have jobless claims on Thursday as well. So if those reports come out showing that inflation has again upticked, remember, we're sitting at 7%, according to what I hear. And then, so if we're now higher well, then the pressure is going to be stronger on the Fed to do more than a quarter point. To do that initial one, and maybe they'll come in higher. And so market's going to have to make adjustments. As we saw today, the bonds were all down. And they were down pretty strongly. The 30-year, or the 20 to 30 year, those tranches, that has been holding 153. That rallies up, comes back 153. Now it's breaking below it. And so this could get very interesting as we get towards Thursday. And those come out early before the market opens, by the way. So tomorrow we can continue to see a rally, and it would actually just need to get above 14,819, 820 to complete the C wave. The C wave should take out the high of wave A in this case. So we do have additional resistance, and we've kind of gotten above, and now we're sitting right at the 618 resistance at 14,749, 750. Then we have 14,789, and then 14,825. 825 would kind of clean it up and put us in a good position. But if we get that decent rally going again tomorrow, and again, I would be looking for at least 200 or maybe more, because that would be the 100%, where wave C would be equal in length to wave A. And then we could cap that off as a 2, and that probably will take us right in to Thursday for pre-opening. Now, what can the other side be? Remember, I'm leaning against the alternate view, which I'm holding off moving it into preferred status because of what may or may not happen on Thursday. If the market decides that whatever comes out, or whatever all this news presents, it's rosy, it's clean, it's wonderful, and they just jump on board, it's going to be a tough count, but it's going to make it look that this was, then this is still minor wave 1 of intermediate 5, right? That's right now still the preferred count. This would then be minor wave 2 of intermediate wave 5. This is wave 1 of minor 3, wave 2 of minor 3, and now we're in the 3 of 3. And actually, if this is 1, 2, we're in the 3 of 3. It should not be sitting around. Right now, market's kind of like after hours, et cetera, et cetera. But this thing needs to cook, and it needs to go tomorrow. And my take would be it gets closer to 15,000 and to 14,900. So stalling out, getting in here. Remember, it's not going to be the third wave. So if we remember clearly, Elliott talked about, wrote about, one of the guidelines is that third waves are often and most often the longest and the strongest wave between waves 1, 3, and 5 of an impulse. And doesn't make any difference on the direction. It is normally the longest and the strongest wave. So it's got to outdo this guy right here. It's got to outdo it, and got to outdo it clean. And right now, I just don't see it. And that would take it that it's got to get up here and surpass, right? I'd be looking, if this indeed is a third, this is where I'm looking for it to get to. It's off to a pretty slow start. So that third wave should get us up to here, quickly up to here. And it may take until after Thursday. So, we have to keep it alive. But what am I going to look for tomorrow? I think we'll still see new money coming in. We'll still see some buyers, picking things up. If Facebook decides it's going to recover a little bit from here, got down to 217, 216 today, and then it did recover, coming back into the close. And but again, now the market at lower. So metaverse continues to have its problems. And so there's a lot of adjustment, and there's a lot of reallocation. Facebook, big stock. and in a lot of ETFs, in a lot of indexes. And so people are going to, they're reallocating out. And so as that continues, the pressure's on the stock. If the stock stops and starts to recover, that's going to add to boosting the NASDAQ. So, but right now, we're starting to see the bullishness come back into Microsoft. We're starting to see it come back. Today, it was back in Amazon. Amazon cleanly back above 3,200. So, you know, we're still dealing with a lot, and Apple up nicely today, up 3. So Apple knocking on that 175 door. Again, all of this can change in a heartbeat. But for tomorrow, I do suspect that we will continue to move higher. We hopefully can reach 14,825, and that might be happening overnight. And possibly as high as 14,923. So, you know, we're at 42. So if we get to 25, that's 80 plus another 100. You know, if it does another 180 point rally like it did today, this is where we'll sit. So, and that can happen tomorrow. Now, downside, you can see that right now, the 15-minute 50 is working its way back above that 200. Now, I'm just going to go out to the hourly because that's the main indicator for me in terms of these moving averages. Now, I want to open this up so we can see it. Here we are. Here's the 200. The 8 is still not above the 200. The 20 and the 50, well, the 20 is not above the 50. So here's what's got to happen. And this was strong rally today. No doubt. Strong rally in the morning. A little bit of a sell-off, strong rally into the close. Here we are. The 4 is the only thing that is broken above the 200. The 8's on the way. The 50 and the 20 need to get above that 200 to give support to a rally continuing and building strength. If it fails to do that, then it's not a third wave up. So this is what I look for to give confirmation and to give support to an advance, picking up some steam, picking up the support to continue. We're not seeing it on an hourly chart. We're seeing it on the smaller time frames, as we should. There's no doubt that we should be seeing it on the smaller time frames because the market is on a 15-minute basis going up pretty strongly. That was a nice strong rally on the 15-minute chart. And that was an ABC down, and this just got it going again. So that's why I think, 1, 2, and then we get a little bit of a 3rd, a 4, and a 5, and we should be up there where we want to be in terms of 14,825. And then we'll be looking to see what happens after that. So downside right now, it can get just as nasty as it did today, where these sudden downdrafts come in, and it could come in tomorrow. So on a 15-minute chart, we'd be looking for it to start to break all these moving averages. If the 50 gets above that 200, it's going to give support for continuation of a rally, but now only we're looking at that 15-minute chart. Let me go to the 30-minute. Let's take a look. We're going to get that additional support from our markets. No, here again. The only ones that are above it are the 4 and the 8 on the 30-minute chart. 20's getting there. 50 still got a ways to go. So the rally has to really pick up to get these moving averages on the 30-minute chart. So basically, we're talking like only on a 15-minute basis, can we expect a stronger rally? And that can change in 15 minutes. Again, the hourly, not that strong right now. Decent moves, but not that strong in terms of getting these moving averages together and in alignment. So if the 15-minute gets into alignment, that could be good for the very short time frames and measuring the moves. So in other words, it's like if the 2, the 5, and the 15 are all in alignment to go up via the moving averages, hey, you participate. It's a great trade. But when you're looking for strength and follow through in that rally, then I need to see the 30-minute and the hourly doing the same thing, getting in alignment. When they all sit in alignment, then I know that this is for real. We're in that third, and we are back on a green light to go back above 15,000. One more that I'm going to check, and then I'm going to call it a day here. Let's look at the hourly chart. The hourly chart, we still are in pretty bad shape. Now, I'll open it up. Thank you. Look at that. The 50 kind of stopped because we got a little bit of a decent rally today, but the only thing it succeeded in doing was closing above the 4 and the 8. Not strong. So we still got the 20, we got the 200, and the 50 is still above the 200. If this 50 drops down below that 200, it's more lined up to go down than it is to go up. And you can see it's still pointing down. The angle's not as sharp anymore. And that just shows that we're kind of chewing around in a range. We've not actually broken that range that I've been holding to thus far this week. It's a very tight little range. And now we've had it for 1, 2 to 3 days. Actually, last Friday set the tone, but the last 2 days, we've not broken the range. So let's see what we can do tomorrow. Okay, trade smart, trade using those moving averages. Get your confirmation of a move via the moving averages and use the Fibonacci, use the Elliott. Next update, Wednesday, the 9th of February.